yesterday was, you were talking about JP Morgan. This morning is Citi. Who's next?
Right. It's probably all of them in reality, Anne-Marie. If it's going to hit JP Morgan and Citi, then it's likely that every single bank is going to face this drop. And to be clear, the drop we're talking about, yes, it is really stark from last year because volatility was so high. That really fueled this trading revenue boom, but it's kind of going back to normal. But part of the reason we're seeing such a negative reaction is both Citi and JP Morgan, it's not just trading revenue they're warning on, it's loan growth that isn't getting back to normal. You still have a consumer that has a lot of savings benefiting from the stimulus. So not only is trading going to look bad, but we're not yet going to see loan growth. So all of that results in the drop in shares we've seen.
Now, we just had a monster bond offering from the EU, 20 billion. The bids for this have been vast. But there's a few people maybe on the naughty step and didn't get fees from it. Who are they and why?
Yeah, so 10 banks, man, is barred from participating in these auctions. And I just want to say yesterday's auction going off without a hitch really shows that the power is in the hands of the EU. They can say to these banks, which is really a who's who of global banks, it's Bank of America, JP Morgan, Citi, Barclays, Nomura, among others, you've had antitrust transgressions in the past. You need to prove to us that you've taken the steps to remedy them. Until you've done that, you cannot participate in our bond auctions. Look, this shouldn't make or break the trading year for them, but it's about 10% of fee revenue generation for these banks in Europe. It's really hard to see how they can replace that as a source, and it really has the potential here to shake up the league tables for who has the most in terms of European bond auction bids here.